Okay, so here's the fundamental scanner that I usually have up. So I like to put stocks only for the funds. I mean, stocks only for the industry. By the way, this is FinViz. It's free. Everything I'm using right now is free, so it's very simple to take advantage of. So I'm going to go over all the settings right here. And the industry is stocks only. The quick ratio is over 1, so they have money. Current ratio over 1, kind of want to keep them the same. Um, the long-term debt, you could play with this one a little bit. I usually like to start it at 0.05, 0.07, and I can move it down to 0.05, just lowers the debt for both of these. The growth, you really want to see 20% on each of these three. So 20% growth of a quarter, quarter over quarter, sales growth quarter over quarter, and EPS growth next year, quarter for 20%. 52-week high, you want it so that the stock is actually in an uptrend already. And the reason for that is you don't want to be buying something that's just sitting there for possibly months on months on months. And, you know, I like to see these in uptrends. For example, APPS was one of them that we had an uptrend. There's so many names that we had in uptrends that you kind of wanted to see it so you're not sitting in that position for a long amount of time waiting for a move. Now, the price, you could fluctuate with this too. I usually like to keep it under like 30, try to get the baby, growth names, or even 40. I'm going to keep it at 40 for this one so we can get there. And the average volume over 100K, so you have a stock that actually trades in volume. So we could look at the valuations here, and we could look at EPS of next year and see what we get here. Let's look for the big growth. You gotta kind of get rid of some of these names, like Mara. I wouldn't really invest in. And for example, we will go into a play that I really liked, and that actually had earnings yesterday. Um, Now, give or take on some of these numbers, as FinViz and just any financial site may not be 100% correct. Um, but these are good numbers to at least check on other sites and see how they compare. So the earnings per the diluted EPS for the year was 0.10 of last year. They're expecting this year to be 0.28. So that's basically 2.8 to 3 times the earnings of last year, which is great. The EPS this quarter is expected to be 4 cents. The EPS growth of this current year was 85%, and next year regarding 115%. And then you can see the same thing here on these. You see the debt is low, showing green. The ratio is good. They have money compared to their shares and for their company. You can see the institution transactions, institutions owned, insider owned, stuff like that. Gross margin. It's another thing I like to see. And for example, let's look at the earnings for this one, ZDGE, Zedge. And so this is a company with pretty low revenue, but their growth is very, very large. Um, and they're really growing and adding to their business and investing back into it. So this is great to see. They raised the full year fiscal 2021 guidance to growth of 75 to 80%. So they're expecting this to get into the 8 to 10 million range, possibly even a little bit higher. Net income of 2.3 million, EPS of 17 cents, which is great. Let's see. So look at these numbers right here. Revenue increased 101% from last year. Active subscriptions, increased 130%, 150%. Income, same thing. You just see all these numbers increasing. That's just one thing you really want to look into, seeing growth quarter over quarter and year over year. Now, if we go to Yahoo Finance, just because it's an easy chart to follow, I'm going to show you this as well. So let this load up. And this is another one of my favorite plays for growth that I really like here. We'll go into the quarterly. Actually, wait, may not need to bring that up. Okay. So here's what we like to see. You're seeing the revenues rise. the earnings rise, went from negativity to profitability, and we're continuing that trend. So they had last quarter being 3.76 mil and 1.04 in earnings, and the earnings itself was 5.3 and 0.17 and 2.3 million. So 5.3 million. So they increased that by like 1.4 million, 1.6 million, and the earnings increased by 1.3 million, 1.2 million. So big increases there, which is good to see, and that's a good thing for a growth name. And we'll go back and look at some other ones too. So this is truly how I find literally all of these growth names. As you can see, FLNT's on here, and you can see the numbers for this one as well, and the debt, the current ratio, stuff like that. And that's, exactly what we want to look for. So let's see, you want to see them in uptrends. I don't really like to focus on bios. That's one thing I write off my list here. So if I see any name with that, I usually just let it go. SNCR could be kind of interesting. I usually like to see them go to profitability too, but the fact that this is expected to turn around pretty big here could be a very interesting one. And they have good money, little to no debt. So disappoints. See, that's kind of, it's not good to see. Evident. So I'm going to skip that one. I'm just going to basically go through some of these and see what we could find. I know Perry was one. Let's see. Hold on. I know I found a couple of these that I really liked. Give me a moment. WYY is good. They're getting growth here. You can see that. Going across that. Not going to go into that one. Trying to find a very nice one. Remember there was one that I really liked. This could be one, I think. Okay, this one's going to profitability. If I believe this may be the one that I was thinking of. Okay, so revenue growth of 34% and 32%, 40, 42. So that's good. You see the profit of 59.5 million compared to 41.6. Kind of want to see growth on both ends. See, now they're showing a loss here and then a net income. Let's see, I'm actually going to skip this one. Hold on. I'm just trying to find some good names that are very easy to understand for everyone. Okay, I know QFin was a one that I really liked, and you can see the numbers here are very good. It's a company out of China. That's one thing that I also don't like to invest in, just because they have had practices where their earnings could be much different than other companies. But this company has really grown. And another one I'm going to bring up right after this, I'll bring that one up, is TIGR. So this one you could see, let's get to it, down to it. Where is it? Okay, total revenue increased 39%, which is great. The income increased 373%. That's big. Basically, that's really big. This one, 287%, 180%. So this is one that I really liked. As you can see, they're growing financially and actually starting to make a lot more money. And you can see the EPS next year, 25% growth. EPS this year of 225% growth, and these numbers here. So that's very nice. This is one that I actually had right around 22. It might have been on this candle and sold around here on 26. This is one that I actually want to look at going forward into the long term again, and I will do that on the next dip. And like I said, the only thing that kind of scares me here is the China thing, but if it works, it truly does work. And another one, same thing, TIGR, but this one has a lot of growth too. And you're going to see that right here. They have little to no debt. The quick and current ratio is not up there right now. Um, but let's show you the earnings. Okay, so that is that. Hold on, let me find their last earnings. Okay, so revenues increase of 148%. That's very good to see. Their total funded accounts up 110%, so they're adding customers. Balance sheet is up. Total account balance, sorry, is up 188%. So yeah, you can see the customers being added there. Okay, so total revenue is up 148, 151. So this is big. I love to see the negativity to positivity here, and they went from negative 2.5 million in earnings to 7.4 million. Same thing here, and same thing here. So big growth in that, and turning from losing money to profitability, which is big. And they keep going into these numbers here. So that is one thing you definitely want to look into. A company that could go from negative to positive, and it shows their growth and their possible that it brings a lot of possible upside in the future for the company. So we could look at a long term here, which I did actually have before as well, and I want to actually build a position. Now that we're near this, just this is Finviz and their trend lines, and we're not that far off from them. So we could build a position here and even add if it gets to that $18 to $17 range, and this could be a good long term. This was at $5, hit 40, and now down into the 20s. Could possibly really move up there. So we will watch that one too. So QFIN and TIGR. Glue got bought out. Let's see. There's another one that's turning around, and we looked into this one before. You see they have a good amount of money. One thing I don't like is just the bio part of it. They're in medical devices. That could be a little tricky. OESX could be interesting. Expected to grow a lot this year. So we will watch this one too. You're just looking for true growth in these names, and it's very simple. You just need to have a sort of guideline here, and you want to see 15 to 20% growth. That's what you really want to see. And this scanner right here is pretty good, and I'll actually send a link out for everyone for this one. And this is just something to do for the long-term plays. You're gonna see the same thing here. Truly, there's not much else you could really add to it. You could add gross margin, which is something I do add sometimes. And like I said, you could move it to US based only, and you'll get a little less names. So ones to take out of this, could be ZDGE, QFIN, and TIGR, three names that I just pulled up. We are also in FLNT. And other than that, I'm gonna send this scanner out. I'll take off the USA. I'll take off the gross margin. You could add that yourself if you wish. And like I said, this is a good scanner that could definitely help you for longer term picks and growth names. And you could move it around on how you like it. and you could be a little more lenient, you could be a little more strict, and see how it works out for you. Overall, the scanner has really helped me for my longer term picks, and I think it could definitely help some others if you want to stick to a longer term investing or even medium term, just a few months out. This could help out a lot too, because look at the gains on Tiger and QFin, and those have really showed out. So look at that. Like I said, the 5 to 40 and QFin, I know it was in the 10 range, and now it's in the right at the 30 range. It might be it is in the 30 range. This was at 10, went to 30, and then even if you got on that dip last week, you're up $10 again. So this is where the growth names could really come to effect. And these haven't, I mean, yes, they've moved up a lot, but compared to others like APPS, this was at $2 just over a year and a half ago. Not even a year and a half. Yeah, a year and a half ago. It was at $8 in June. In June, it was actually at 5, sorry, 6, 7, and now it's at 90. And it does have these dips. So here it got to 30, dipped to the 20s, and look where it went from there. Just straight up, making the dips over and over and over and over. And now it's at 90. So just definitely one thing to look into. And this is a great tool to use. Like I said, FinViz is free, and I'll be sending this scanner out with it. So I'm going to end the recording. I hope everyone enjoyed. It was just a quick overview. We went over a couple of companies so you could see what to really look for. And then truly you just have to pick which ones you truly believe in, look at the earnings, make sure they're still growing quarter over quarter, and they are guiding like that. For example, ZDGE guided 75 to 80% increase in revenue this year, and it's just quarter one, so they got 3 more quarters and they're expecting 75 to 80% growth in revenue. That's very good, and they could always up that guidance. So definitely one to look at as well. Thank you guys for joining, and have a great night.